delighted to welcome our third speaker for the panel, Mr. Darren Davis, who is the CEO of Saudi Maaden. And I'd welcome him to the stage to make his presentation. Thank you.
Morning. So the first question I should answer is, what's a mining company doing at JIPCA? There is logic to this. The biggest part of our business, as you'll see, is actually phosphate fertilizers. So although it starts with mining, that moves quickly into chemistry and processing, and of course fertilizers definitely is connected with the chemical industry. And second, and I got it more from listening to Salah and Musab, who are old friends, so it's good to be here with both of you. I think there are a lot of similarities between our industries in terms of the challenges we're facing and the way we see business, and I think it'll come as we go through the presentation. I'm going to spend a very brief moment just to tell you who Maaden is, because I'm sure a lot of you don't know who Maaden are. So I'll give you a brief introduction, and then talk through some of the enablers that gave us the opportunity to grow as we have, then talk about our strategy and how it fits with the local and international growth plans. 10 years ago, Maaden almost didn't exist. We were a tiny little gold company in Saudi Arabia, producing about 40,000 ounces of gold. So this is insignificant in the global mining. In 10 years, we increased that 10 times, so 400,000 ounces of gold. We also developed a copper mine with Barrick Gold as well. More importantly, we developed two mega industries. One was aluminium in cooperation with Alcoa. So this is the largest fully integrated aluminium business in the world. And second, we developed a phosphate business, which is now the third largest exporter of phosphate fertilizers, and soon will grow even beyond that. What that means is we have a mining business that's spread across Saudi Arabia. That's where the source of our resources are, and processing facilities that are in Saudi Arabia and in East Africa as well. And I'll come to East Africa in a moment as I talk about our global growth. We went from 800 employees 10 years ago. We now have 10,000. We've invested $25 billion in that decade. Last 12 months, notwithstanding the commodity price that we're all very aware of, we still produced $1.5 billion of EBITDA, and our market cap now is around $15 billion, which puts us just outside the top 10 of global mining companies on a market cap basis. So an incredible growth story in just 10 years. Let me talk about some of the things that enabled this. And Salah, you mentioned about enablers, and it's very important. This is the local context, if you like. Saudi Arabia, how could you do this in such a short period of time? You're all chemists, so maybe not as interested in geology as I would be, but Saudi Arabia is a very prospective country for geology. Phosphate and bauxite are world-class, world-scale resources we've known for a long time. And the exploration work we've done in the last 10 years shows that the opportunity for gold and base metals is also very substantial in Saudi Arabia. So that's the fundamentals. You know, you need to have something in the ground before you start building a mining company. I think that the legal framework in Saudi Arabia for mining has been very good. There's a mining law that's been in place for over 15 years. It's been pretty slow moving, to be honest, so getting licenses is a bit of a painful process, but you can get the licenses, and when you get them, you're free to go about your work. The fiscal regime's been very stable as well. So although it's been a fairly bureaucratic process, it's worked. And with the new law they're bringing in now, which was published last year and will be enacted fairly soon, we expect the environment in Saudi to actually improve for mining, which we'll benefit from even further. Government support on infrastructure is absolutely critical. Saudi Arabia is a big country, and as luck would have it, the best resources, of course, are located in the most remote locations, nowhere near population centers. So the government's investment in rail and port in particular enabled us to actually then build an industry on top of that infrastructure, which actually made the resources that had been in the ground and known about for a very long time, actually made them economic to develop in the country. And finally, the capital markets as well. That $25 billion we invested, none of that came from the government. So this was raised through two equity raises in the Saudi local market, and then debt from local banks and international lenders. The ability to raise that capital in Saudi particularly is a really big advantage. I think you're seeing it now in the Aramco IPO. For all of the noise you hear around that IPO, if you look at the reality is that that company has raised over $15 billion just in the local market. That's an incredible, powerful source of capital for any company. I can't move on without mentioning Vision 2030. It's something that we're all aware of, and I think a lot of people know the sort of the big aspirational stories of Vision 2030. What a lot of people don't realize is there are a lot of KPIs and detailed action plans underneath Vision 2030. So yes, it's an ambitious plan, but there's actually an implementation underneath it which you often don't see. I can tell you in Saudi Arabia, if you're doing business there, you see it all the time. I often tell people 10 years ago in Saudi, if you wanted something from the government, you're always knocking on the door trying to get the government to do something. Now it's the opposite way. They're always knocking on our door, asking, what do you need? What can we do to make your business more successful? Within that Vision 2030, mining is a key pillar. You know, one of the goals of Vision 2030 is to remove the dependence, or at least lessen the dependence of Saudi Arabia on oil and gas, which is obviously a good strategic goal to have, and mining is seen as one of the opportunities to do exactly that. So there's a detailed mining strategy. It talks about making the environment much more easy for investors. As I said, new mining law, make the legal framework much more efficient as well. So we see Vision 2030 actually giving us a lot of opportunity, and there'll be opportunity for others as well, so it's not just Maaden that will benefit from this change. So our strategy is simple. It's 3 pillars. The first pillar will sound like I've just copied Salah, but as Salah said, making the most of the assets that you have is always a good strategy for any capital-intensive industry. You know, we've invested this huge amount of money in the last 10 years. The first thing we need to do is to make sure we operate our assets efficiently and safely. So that's our number 1 priority. We're investing a lot in digitalization. I think rather like chemicals, mining is a little bit slow in adopting digitalization and the new wave of technology. And as I see the things we're starting to deploy in our business, it's just amazing what's possible. And I think one of the challenges for us, I won't talk about too much, one of the challenges for us in industries like chemicals and mining is to think differently about innovation. Because a lot of this innovation comes from young people, not old guys who've been in the business for a long time. And you really have to think differently. You can't just go to the big companies to find solutions. You go to a lot of small companies, younger people, small institutions that come with very innovative ideas. But I think the potential is enormous, and I think we're only just starting to see the beginning of that. At the same time, we can't lose focus on our core values of sustainability. That means not harming our people, not harming our communities, and not harming our environment. These have to be things that we never compromise. Yes, we want lots of production, but we only want safe production, and that's a message we give to all our employees. Environment as well is a big challenge. Mining, a lot of mining processes use a lot of water, for example, and Saudi, like most of the region, water is a very precious resource. So we're shifting away from using desalinated water and aquifer water to using treated wastewater. Which is becoming more and more available. So our largest gold mine in Saudi Arabia, for example, uses treated wastewater 100%, doesn't use any desalinated or aquifer water. Our other facilities are shifting towards that. As the government makes more treated wastewater available, we'll start shifting our usage towards that to save the precious water resources. CO2 is also an important issue for us, and waste byproducts as well, which we're working hard on. Second pillar is, how do we continue to grow in the local market in Saudi Arabia? As I said, there's a lot of potential in Saudi Arabia. The biggest potential in minerals are really around the 4 minerals we're in, which is phosphate, bauxite, gold, and base metals. So we'll continue to focus our growth on those 4 areas. Phosphate, we have a lot of resources in the ground, and really the growth will be determined by the ability of the market to absorb phosphate fertilizers coming from Saudi Arabia over the coming decades. So we're driven more by market than our ability to invest. Second, we'll continue to explore. We've tripled our exploration budget this year, and we'll continue in 2020. And it's something we've preserved even as commodity prices have dropped, profitability has dropped, and of course we're all focused on cost. But it's one of those things you just have to keep investing on through the cycle, because you don't regret it now, but you regret it in 10 years if you don't invest in the future. So we see a lot of potential for gold and base metals there as well. And then finally, global presence, which I'll spend most of the rest of my time on. Our global ambitions are really linked to what we're doing and what we know. So this is not about building just a big company. Globally, we're looking at really 2 areas. One is in phosphate. So as you become a big producer, you need to access the markets better. And second is copper within the base metals space. And that's to complement, again, what we're doing in Saudi Arabia. And I'll just spend a couple of minutes talking particularly about the global ambitions we have. 10 years ago, we were producing no phosphate fertilizers at all. In 5 years, we'll be the second largest exporter in the world. That's a big change to absorb. That means we've had to adapt very rapidly in terms of our marketing capabilities. We have South Asia on our doorstep, which is one of the fastest growing markets and most important importers in the world. So that was an initial advantage. But we've had to branch out. We're exporting into the big growth markets of Africa and Latin America in particular. We also sell into Australia and opportunistically into other markets like North America. And those markets are very different. So you go to Brazil, one of your big challenges is not demand, it's actually getting your product into the country. So getting port access is very difficult in Brazil, even though it's one of the biggest markets in the world. You go to East Africa, it's ports and it's inland infrastructure and financial. So the challenges are very different in different markets, and we've gone through a combination of being there ourselves, partnering, and more recently through an acquisition in East Africa, which is Meridian. We completed this acquisition about 3 months ago now, in August. It's around $100 million value. It's not a huge acquisition, but it really changes our global footprint and our plan in terms of accessing phosphate markets. This is all about being able to move our phosphate fertilizers from Saudi Arabia into the key markets. The company is in 4 countries, Malawi, Mozambique, Zambia, and Zimbabwe, so not the easiest countries in the world to do business in, but they're in the key market of Africa. Great infrastructure already in place, a very good management team. Things that are very hard to replicate. This took 30 years to build for the management team, but very hard to come in and do that, which is why we decided to acquire rather than build in this market. We're going to continue investing in that. We think it's a model that could actually be rolled out beyond these 4 countries into the rest of Africa, and more investment as well would grow the markets they're already in. And Africa's a great example of a good market for phosphate. Phosphate in the end, fertilizer demand is driven by population growth because people eat. And Africa is the fastest growing population in the world. Sub-Saharan Africa is growing around 10% per annum. And at the same time has one of the lowest application rates of fertilizer globally. So it's roughly half of what India applies to its land and a tiny fraction of what North America, Europe, and most of Asia, or most of developed Asia, including China, applies. So this is a market you need to be in if you want to be in fertilizer, but it's a very difficult market. So we see this as a very important step for us in terms of establishing ourselves outside of Saudi Arabia in a market that's going to be key for the future. And then finally, on our global strategy, electrification, it's an exciting thing. I'm sure you're all aware of it. Maybe I see there was a Tesla showroom on Sheikh Zayed Road yesterday. I didn't realize there was one here around. So I think it's coming everywhere in the world, electrification, particularly in transportation. How do you play that, though? I mean, there's the battery technology, so everyone gets very excited about lithium, for example. But lithium's tough. There's a lot of lithium around, actually. So yes, there's big growth in demand, but you have to be really concerned about the supply side as well. Nickel, similarly. We think copper is the right play. So we're already in copper in Saudi Arabia. If you look at the effect of, or the impact on electrification on copper demand, you have the cars. So yes, the battery needs quite a lot of copper, just the battery technology. But it's also the motor, and it's also the rest of the electricals in the car. And that's not substitutable by any other material. So a typical EV, electric vehicle, uses 4 to 6 times the amount of copper than a normal petrol or diesel-powered vehicle would take. And that's 100, 120 kilos per car of copper. But beyond that, what people forget is, of course, electric vehicles need to be charged. So you have the infrastructure. Now that's where the real demand comes from copper. It's the infrastructure for charging, because the electrical grid needs to be enhanced, distribution grids, and the local facilities for charging. And that's where the real demand comes from. So copper we're very bullish on. We're exploring in the kingdom, but the nature of mining is that time, that life cycle from exploration, inshallah you're successful, you find something, you develop it, then you construct it, and then you start producing. That's a 10-year cycle. We don't want to wait 10 years to be in copper. So that's why we're looking internationally at operating assets and investing in new projects. I'll finish up with the key issues that we think about in mining, and I think there's a real parallel here, certainly to most of these for chemicals as well. I think first of all, volatility. You know, we're used to in commodity markets, we're all used to volatility. We know things change and we don't have much control over them. But I think what we're seeing now is more uncertainty, more extreme volatility, so things change much more quickly. I remember, you know, years ago I was a banker and we used to do lending for petrochemical facilities, and you know, the consultants would tell you, it's like a 7-year cycle, that's what you should bank on. That nice, easy cycle is just not there anymore. It just changes all the time. The pace of change of volatility is so much faster than it was 10, 15 years ago in the past, and it's probably here with us permanently. So that means you have to focus on being in the right commodities with the right assets. So for us, phosphate fertilizer is a great example. You know, it's a business that's selling to demand which is driven by global population. So as long as people keep having children and keep eating, demand will grow. And those are two pretty popular hobbies among human beings. So the fundamentals of growth in demand are very good, and on the supply side, relatively limited opportunities to bring more supply into the market. So it's a great commodity to be in. And in Saudi Arabia, as I talked about, we have great assets. We have scale, we have all the facilities, we have all the inputs that you need for that business. I think risk as well is also something we have to get more used to. You know, it is a riskier world and it's a faster moving world. And of course you have to be cognizant of risk when you're making your investment decisions, whether it's a new project or whether it's an M&A transaction. But I think we need to be careful we don't allow risk to kill growth, because in the end, the world needs minerals, metals, and chemicals. And the demand for those materials is growing. So we need to be able to grow our industries. And I think one of the angles to this that's very important is how we communicate with our shareholders. Our businesses are very capital intensive. So we're taking long-term bets, long-term investment decisions. And you know, we need to have a perspective of decades and not quarters. And that's not always easy to square that circle with the investor community. And we have to do more, I think, to help our investors understand that and understand volatility is just a natural part of the business. But if you're in the right part of the business, you can still make money over the long term. I guess we're slightly smug in that, you know, we're a listed company, but our largest shareholder is the Public Investment Fund of Saudi Arabia, who acts as an investor, but they're definitely someone with a very long-term perspective, and that's an enormous advantage for us when we make investment decisions. And then finally on sustainability, no one would question the fact that we have a responsibility in our industry, in the chemical industry, to make sure we do have the most limited impact possible on people, communities, and the environment. Everyone knows that responsibility, and we all have families, and we think about the future of our families as well. So we know that responsibility. We also have a responsibility, though, to supply the materials we're producing. The world requires chemicals, it requires minerals, it requires metals. That is not going to go away. We have a responsibility to provide those. I don't think those two things are necessarily in conflict. And I think our experience is, and I'm sure yours is as well, it's possible to grow these businesses, it's possible to produce what we produce without causing irreparable damage to the planet. But the truth is, you know, civilization requires chemicals, minerals, and metals. And I think we need to be more robust. We need to give that message that we're aware of sustainability, and give the message that what we do has a big impact on developing countries particularly. Maybe this is more mining than chemicals, but I could tell you Saudi Arabia is a wealthy country. If you look at where we invest, which are some of the more remote areas of the country, these are more impoverished parts of the country. Not very many job opportunities. When I go there now around our mining and our processing facilities, I see people with good jobs, I see good schools, they're improving, a university we invested in. And in the end, people have long-term, sustainable jobs that makes them able to build a life and raise a family. This is a positive impact from what we're doing, and this will be there for a very long time. So that's really my final message. Let's be positive about what we're doing. Civilization needs us. We have a responsibility to deliver what we're producing. We have a responsibility to protect the environment at the same time. I think we can do both. Thank you.